Hi friends, Jio BlackRock has started launching mutual funds and the billion-dollar question is that should we invest in Jio BlackRock mutual funds or not? In this video, I will give you totally unbiased commentary. This is not a paid promotional video, and more importantly, I will give you data points that nobody is talking about. With that, let's get this video cracking. What you see on my screen is Jio BlackRock website, and there are few mutual funds that they've already launched. In this video, I'm going to cover only the passive mutual funds or the index mutual funds. For example, they have launched Nifty Next 50 Index Fund, Nifty 50 Index Fund, Nifty Small Cap 250 Index Fund, Nifty Mid Cap 150 Index Fund. We are going to review these 4 mutual funds in this particular video, and depending on how you're liking these videos, I would come up with part 2 or part 3 of these videos. First, let me talk about Nifty 50 Index Fund, and let's understand the difference that Jio BlackRock is bringing onto the table. As you can see here, very nice and tidy website that they have. What you notice here is that Nifty 50 index that Jio BlackRock has brought to the market. It's a blue chip companies. We know it covers Nifty 50 companies only. It's a low cost, but the big difference here is the global index expertise. Jio BlackRock is claiming that they are bringing global index expertise to the table. What does this actually mean? So let me show you some data in the next 1 to 2 minutes. So first point is that this global expertise is coming from BlackRock. We all know who BlackRock is, but more importantly, if you look at the data aspects, they are managing 11.6 trillion of assets under management globally. Put this in some perspective, this is almost 3 times India's GDP. So this is a huge scale that BlackRock is managing. But more importantly, out of this $11.6 trillion, $7.75 trillion is only in global indices. This is important point. BlackRock is managing such a huge asset under management just in the index mutual funds, and they are not managing it manually because such a scale cannot be managed manually. They have a software. You might have heard the name Aladdin. I'll speak about in a minute. But these index funds, for example, if I show you, these are traded in the brand name of iShare. You can see on my screen, these are more than 400 ETFs that they have globally across the markets, and they are managing huge asset under management. Now, what is the benefit of using this Aladdin software that people are not able to explain? 2 quick points that I want to make. Point number 1 is that whenever the index is rebalanced, for example, Nifty 50, let's say Zomato entered into Nifty 50 recently. What happened? Every asset under management company had to rebalance their index as well to buy Zomato so that they can mirror the Nifty 50. If they are not able to mirror the Nifty 50, what will happen? It will lead to high tracking error. And investors do not like high tracking error. In case of Aladdin, when all these rebalances are happening, Aladdin software claims to do this ahead of time. That is what they're claiming. And in the process, they are saying that they are trying to minimize the tracking error and also reducing the cost. That is point number 1. Point number 2, even more important, is that if you look at the traditional index management process, how a AMC will go and do the balancing or rebalancing? They will download the index, Nifty 50. What is the weight of each company? They will match it with their own portfolio. What is the weight that they are carrying? And then they will adjust it. This is a very, very manual process traditionally. With Aladdin software, they claim to have automated this entire process, meaning that this is all automated because they're managing, remember, more than $7 trillion of AUM. So there has to be an automated process. Manually, it will lead to a lot of inefficiencies. Now, as a result of all of these automation, they claim to reduce the tracking error, and I'll show you the data as well. And secondly, they also say that the expense ratio we offer is very, very low as compared to many other AUMs. And this lower expense ratio helps you save money. How? For example, they've shown this data point here. Although this data is slightly blown out of the proportion, I'll talk about that in a minute. But what the data is saying is that if you had invested 1 crore in Nifty 50 back in 2005, they have given April to 2005 here. By June 2025, if they calculate Nifty returns, and if they assume that you paid only 0.30% of expense ratio on that particular mutual fund that you got versus somebody else who got that mutual fund at 0.15%, that person will save 60 lakhs. And another person who got this at 0.10% expense ratio, they will save 70 lakhs. And these calculations, if you go and do yourself, you will find that yes, If you have a huge sum invested over a longer period of time, even 0.10% of expense ratio will make a big difference to your total corpus that you will have. Point is very, very simple. Whenever you're investing in index fund, two main important parameters. One is the tracking error. As low tracking error as it is, that is very, very good. And secondly, the expense ratio. Lower the expense ratio, better your returns are likely to be. Now, having understood this, does this practically make sense for us to invest in Jio BlackRock or not? Let's just come back to our Nifty 50 example. As you can clearly see here, the exit load is nil. That's okay. So many other AMCs are giving us exit load as nil, not a problem at all. But if you come down here, what you will note here is the first of all tracking error. The tracking error Jio BlackRock is claiming is 0.04%, which is excellent. This is very low. But if I now show you some other Nifty 50 index mutual funds here on my screen, what you see here is that, and let's go and look at the tracking error. I've arranged them from lowest to highest. You see here, there are so many other Nifty 50 index funds that are giving even lower than Jio BlackRock. So for example, UTI 0.01. Again, by no means these are recommendations here, but I'm just sort of comparing it so that you understand the data points. HDFC 0.01, ICICI Pru 0.01. In fact, there are so many other Nifty 50 index funds that are offering lower than Jio BlackRock. Let's go and filter out and only have those mutual funds here or index mutual funds that have got up to 0.04% as the tracking error. So I'm going to change that here, and that gives me total 12 index mutual funds, 12 Nifty 50 index mutual funds that are showing us the tracking error which is lower than 0.04%, lower than Jio BlackRock. Now comes the second important point. If you look at the expense ratio of Jio BlackRock mutual fund, you will see here the total expense ratio is 0.10%, right? That is the money that you will end up losing out from your returns because you are giving this money to manage your index mutual fund. Now, if I compare this with other AMCs, if you see the expense ratio here varies from company to company. There are, for example, UTI is as of now charging 0.17, HDFC 0.20, slightly more than Jio BlackRock, right? Now, you can see that the expense ratio here. Now, let me again filter out this list and bring only those AMCs where the expense ratio is lower than Jio BlackRock, which is 0.10%. So if I put 0.10% here, let's go and have a look at the data, and you see total there are only 3 AMCs as of now for which the expense ratio is lower than Jio BlackRock and the tracking error is also claimed to be lower than Jio BlackRock. These are Navi Nifty 50, Nippon, Edelweiss. These are not recommendations. Point is very, very simple. As of now, when it comes to Nifty 50, there are already AMCs that are offering better tracking error and lower expense ratio. Also, if you see, the difference is not huge when it comes to Nifty 50. Last point about Nifty 50 is that, let's say tomorrow in the future, there is a possibility that Jio BlackRock might improve their index funds tracking error further, as well as their expense ratio may come down. Why? Because they've just launched this particular fund. And they may take some time for their software to stabilize, to make sure that they can find some more efficiencies. So definitely you can continue to track it. But at this point in time, when it comes to Nifty 50 index, I wouldn't go and switch my index mutual fund. Why? Simply because if I sell off my Nifty 50 index fund, I will end up either incurring the short-term capital gain or long-term capital gain tax. Therefore, I'm not interested in Jio BlackRock Nifty 50 index fund as of now, but definitely 2 quarters down the line, 3 quarters down the line, let's review it again, whether their expense ratio comes down, tracking error can come down further. It might make a compelling reason, but definitely we cannot ignore Jio BlackRock here because of the reason that we have talked about. Let me now move to 3 other indexes and bring you key insights. Before I do that, so far if you're liking this video, request you to hit the like button, become a lifelong subscriber of my channel, and also if you want to get exclusive content your way, you can consider joining my YouTube community. Almost on a daily basis, I speak about various assets, for example, mutual funds, stocks, etc., that will help you make better investing decisions. The feedback of this community has been excellent. Simply go to my channel, find the join button and be my guest. The second index mutual fund that we want to review is Jio BlackRock Nifty Next 50 Index Fund. We all know Nifty Next 50 Index includes stock number 51 to stock number 100. These are called emerging giants. At some point in time in future, they may join Nifty 50. But if you look at the past track record of the returns of Nifty Next 50 versus Nifty 50. So for example, if I show you the data, Nifty Next 50 index in the last 20 years has gone up by 20x. And if you compare this with Nifty 50, Nifty 50 has managed 16 times returns in the last 20 years, the same period. So definitely Nifty Next 50 has given better returns than Nifty 50. But of course, this is more volatile as an index. So again, I'm not saying that go with Nifty Next 50 or don't go with Nifty Next 50. Point is that let's come back to what Jio BlackRock's offering is in this particular space. So if I come back and talk about the exit load is again nil here, which is very good thing. And if you come down here and have a look at the tracking error, it is at around 0.12%. This is definitely higher than Nifty 50 index. In Nifty 50 we had around 0.04%, very low tracking error. It is here at 0.12%. Now if I show you the data about many other AMCs, so I've got total 18 Nifty Next 50 index mutual funds here, and if I show you from the lower to higher tracking error, so let me arrange it from lower to higher, you will see there are a few index mutual funds which have given lower than 0.12%. Which are those? Let me actually filter these out by, so let me put a filter here and say give me only those ones that have lower than 0.12%, and I get only total 5 Nifty Next index funds that have delivered lower than 0.12 tracking error. You can see them here from lower to higher. Now comes the second important point. Tracking error is one thing, but what about the expense ratio? What is the cost that I'm going to pay to be able to buy that particular index mutual fund? Here the total expense ratio Jio BlackRock is offering at the time of recording this video is 0.15%. But if we come back to these AMCs, we look at the expense ratio here. The top 3 AMCs here, SBI, UTI and LIC, they have higher expense ratio than Jio BlackRock at the moment. Edelweiss and Axis are the two that are offering lower expense ratio. Actually, Edelweiss is the only one that is offering lower than Jio BlackRock because Axis is almost same, 0.15%. But comes the important point. Nifty Next 50 index fund, here the current tracking error that Jio is showing you is around 0.12%. The question comes that tomorrow, can they bring it further down from 0.12% to let's say 0.06%, 0.07%? And can they also reduce this expense ratio? This question remains to be seen, of course, depending on how this fund performs. But definitely for people who want to take fresh entries into Nifty Next 50 index, Jio is a strong contender because out of so many 18 AMCs that we saw, as of now, during the time of the launch, they're stacking at number 2 or 3, which is excellent. Again, not a recommendation that you go invest in Jio BlackRock. This is not a paid promotion, but this is what the data is telling me. When it comes to switching your index mutual fund from, let's say, some other AMC to Jio BlackRock, please be aware there might be short-term capital gain tax, long-term capital gain tax. And if you don't want to pay any of those tax, just be where you are. You don't need to necessarily switch to Jio BlackRock just because they are offering slightly better tracking error, slightly better expense ratio. So in my view, if you already have a Nifty Next 50 index, relax. You don't need to really switch it. But if you are going to put a lot of money into Nifty Next 50 index, then Jio BlackRock, definitely consider, evaluate, do your research and take your positions accordingly. Let's now move to third index mutual fund, that is Nifty Midcap 150 Index Fund. Before I start giving you commentary about this one, so far if you're liking this video, request you to hit the like button, share this with your friends and family, because more people understand these data points, they will be able to make better, well-educated decisions rather than just going behind hype. With that, let's come back to Midcap 150 Index Fund. Exit load is nil, which is very good thing. But if I come down here, if you look at the tracking error, Jio BlackRock is claiming to have achieved 0.15%. But if we compare this with industry data points, for example, if you see on my screen, there are total 38 Nifty Midcap 150 index funds here. And if you look at the tracking here, for example, there are funds that are offering less than 0.15%. For example, Motilal, Bandhan. In fact, let me filter out and only have those index mutual funds that are giving tracking error less than 0.15%. There are total 9 index mutual funds that are offering less tracking error than the Jio BlackRock's 0.15%. What about the expense ratio? If I look at the expense ratio here, Jio BlackRock is giving around 0.15% expense ratio. Now, if I come back to that data point, see how many of these AMCs are giving you expense ratio less than 0.15%. Actually, if I scroll down, none of these. All of these have higher expense ratio than Jio BlackRock. Key question now is that do you want to go for lower expense ratio index mutual fund? Then Jio BlackRock is clear choice in the Nifty Midcap 150 space, and the tracking error they are giving is 0.15. Of course, some of these index mutual funds are offering less tracking error, but now it's a choice whether you want to go with slightly higher expense ratio and go for lower tracking error. It's an individual decision that you can decide. But clearly, when it comes to Midcap 150 index, Jio BlackRock so far has offered something that is not offered by all other AMCs. That's my true honest feedback on Midcap 150 index. Let's now come to the fourth and the final index mutual fund that I want to cover in this particular video, which is Nifty Small Cap 250 Index Fund. If I come down and speak about the tracking error of Jio BlackRock Nifty Small Cap 250 Index Fund, it is 0.19%. What about the industry and many other AMCs? So I've got the data here for other AMCs that have offered Nifty Small Cap 250 Index Fund. And as you can see here, almost all of them except one, Nippon, all of them are able to offer tracking error which is lower than 0.19%. So Jio BlackRock is not offering something out of the world here when it comes to tracking error as of now. Again, things may change in the next 1 year or so. But now let's have a look at the expense ratio. So what is the expense ratio of Jio BlackRock's small cap fund? It is 0.15%. And if I compare it with other AMCs here, actually all of these AMCs except Edelweiss, which is 0.14% lower than Jio BlackRock, and Kotak Nifty Small Cap 250 Index, that is 0.15% similar to Jio BlackRock. Other than these two, all other AMCs expense ratio is slightly on the higher side. So actually it is only one AMC that has managed to offer better offering than Jio BlackRock Small Cap Index, which is Edelweiss. Expense ratio 0.14% and tracking error 0.12, which is less than Jio BlackRock. Again, not a recommendation here, but these data points make you understand the comparison in terms of where does Jio BlackRock stands as of now. Tomorrow things may change. I don't know what the expense ratio will be tomorrow. I don't know what the tracking error will be tomorrow, but definitely Jio BlackRock's index mutual funds are worth exploring in my view. Definitely in small cap and mid cap, there are only one or two AMCs that are very close to Jio BlackRock. So worth considering these ones. But when it comes to Nifty 50, I did not see major differences. So you don't need to blindly switch out from your current index mutual funds. But hopefully this video would have given you a lot of insight about Jio BlackRock. Now you understand the data points. So definitely share this video with your family and friends. Let me know in the comments if you would like me to cover Jio BlackRock's Flexi Cap Mutual Fund. The NFO is closed now at the time of recording this video. But if you want me to talk about Jio BlackRock's Flexi Cap, which is an active mutual fund, let me know in the comments. Depending on your traction on this particular video, your likes, your comments, your shares, I may come up with part 2 of this Jio BlackRock Flexi Cap Mutual Fund and many other debt mutual funds that you need to understand. I hope you enjoyed this video. If you did, like the video, let me know in the comments a simple thank you. I look forward to see you in my next video. Until then, keep rocking.